I'm really thinking that this is going to be something that's going to help people set themselves up for the next week of trade. And who better to do it with than you, my friend?
Next Week on the Trading Floor was developed to explore current trading ideas, market trends, and opportunities to watch. It's real-time insight to help you make informed decisions in the ever-evolving financial markets. We'll even give you a stock or two to watch, whether it be to buy or sell. I'd like to welcome John Najarian of Market Rebellion. John is a veteran of the stock market and a seasoned options trader. John, welcome to Next Week on the Trading Floor.
Hey, great to be here, Andrew. I'm really thinking that this is going to be something that's going to help people set themselves up for the next week of trade. And who better to do it with than you, my friend?
Thank you. Yeah, we talked so much about what happened last week, and even the weather. The weather is like what happened last week, what's happening now. Well, I know what's happening now. Let me know what's happening next week so I can invest in something good and make some money. But John, let's talk real briefly about some of the market happenings this week. Obviously, the PCE didn't come in where people wanted it, and then the GDP is not where the Fed wanted. Unemployment is low, so the numbers are all screwed up, if you will. Nothing's making sense. So where do we go forward with this market? Because we know we're not getting any interest rate cuts anytime soon.
Yeah, that's one thing that became pretty clear. Even Austin Goolsbee, under the Obama administration, he was one of the advisors to President Obama and his Council of Economic Advisors. And even he said, I don't know if we're going to see any cuts this year, guys. I think he is unusually accurate with that. I think the numbers that you just described, the PCE, for instance, inflation rising at a 3.7% in the first quarter, that is not what the Fed wanted to see if they wanted to cut. They, of course, want to see it moving back down towards 2. Well, it's not. It's moving higher still. And it's not making those leaps like it did, Andrew, when we got up above 7 and 8. But it's still not in the zone where they could justify any cuts. And that's why I think Fed Chair Powell and the rest of the Fed are more or less staying pretty silent about cuts and instead just saying, well, we're going to keep looking at the data, which is more or less what they should be doing.
And Austin Goolsbee of the Chicago Fed, and he's a pretty knowledgeable guy. So I would take him at his word at this point. So let's talk about the indices a little bit. The S&P, the NASDAQ, the Dow, they all slipped a little bit. But after everyone sort of absorbed this news and said, okay, you know what, maybe we're not getting rate cuts, now everything seems to be climbing again. Are we looking for, is there more runway left here?
There is potentially more runway. Although I would always point out that a lot of these companies are reporting numbers that are the worst earnings reports, a number of the big tech companies especially, the worst earnings in 1 year, 2 years, 4 years, 5 years. That's not a sign that the economy is rip-roaring right here. So I do think we can see dead cat bounces. I just don't know that we go higher than where we've been already. So I would say that we're in a zone right now where without any interest rate cuts, I think we've more or less seen most of the highs for the year. And of course, the Fed would rather play neutral going into the election. Right now, it's neutral because they're not raising rates or cutting rates. And I think that's probably where they'll be into the election, which is not where the market watchers wanted us to be. They thought perhaps we'd see cuts into the final third quarter, that it would help into the election. That doesn't seem like it's on the horizon.
So we are, as you alluded to, back in earnings season, as we were, we happen to go through this every 3 months, whether we like it or not. And in the last earnings season, we went through an AI bubble. You're talking about Meta, IBM, Google, Microsoft. We're here once again where artificial intelligence seems to be the story. Are, these stocks, although they're pouring, like Meta pointed out, they're pouring $40 billion into AI, which is higher than, I think they were 36 or 38 in the last quarter. Is this what's going to drive the market even further?
I think it's a better bet than the metaverse, which Mark Zuckerberg famously poured tens of billions of dollars into that, and it bore no fruit at all. Apple also kind of caught with their pants down, putting all their bets on a self-driving car or an EV, and now they're reversing course and going after AI. I think both these guys, as smart as they were, Zuckerberg and of course the chairman of Apple, are now focused on where they should be focused, which is artificial intelligence. How is it going to help them provide more to their public, whether or not it's social media in the case of Meta and diving through there and helping people use that, or whether it's something similar perhaps with Apple. I think they're both going to have to spend a lot in the short term to help catch up to Google and to some of the folks that are really taking advantage of artificial intelligence.
I want to just talk a minute about the bank stocks. Now, usually when the economy is going well, bank stocks do well. And I guess the first week of earnings, we saw a lot of the bank stocks do really well. Another anomaly, because it doesn't look like the economy's in great shape, but banks are doing well again.
Yeah, it's kind of strange, but those banks that especially were able to lean up during the slower times when they were waiting for rates to go up, they also got that benefit of last year, those banks that were in trouble during the March, April, May timeframe. Many of them, of course, are no longer here, and instead they're part of, for instance, Jamie Dimon's group, JPM, instead of being independent like First and some of those others that got absorbed. Silicon Valley Bank, Signature Bank, a lot of these, First Republic, a lot of those banks are now parts of bigger banks, which those bigger banks didn't have to buy them, Andrew. So if there was any value there at all, and clearly there was, these guys got a steal, picking up these banks for virtually nothing. And I think that's partly why some of these big money center banks, the too big to fails, posted up some pretty strong numbers. And I wasn't terribly surprised by that.
What is the bank stock that you're really high on this coming week?
Well, I'm still very high on Goldman Sachs. I mean, the stock, Andrew, hit a 52-week high, like roughly $430, $429, something like that. It's on a tear. The first quarter revenue surged nearly 30%. That's a very strong quarter for anybody. And obviously, Goldman Sachs has a bunch of levers to pull because they have prime banking and clearing. So that one is one where, of course, a lot of hedge funds clear through Goldman Sachs. Goldman Sachs also trades pretty aggressively. And that their revenue number being up, I think it was nearly 29% for the first quarter, was phenomenal. Seems like DJ Solomon, which he's dropped the DJ, and I think that's a good thing. He has, again, put his eye on the ball rather than taking his eye off the ball, perhaps, which a lot of us had thought that he had done in the previous, perhaps, 8 quarters. This was a phenomenal quarter for them. I think you're going to continue to see investment banks like Goldman Sachs, like Morgan Stanley, like JP Morgan, do very well with a lot of the big M&A, mergers and acquisitions, that we've started to see popping up again. And we'd had a dearth of that for several quarters, but now it seems like people are really into finding a partner, squeezing more out of that partner so that they can drive more of that revenue. And that's why Goldman Sachs is one of my top picks going into next week.
Yeah, and you mentioned their investment banking and their wealth management services also jumping. So, they have a lot going on in a very positive direction. So that's a really good thing for them. And it seems like the bigger banks, the fundamentals right now for the bigger banks seem to be trending in a really good direction.
Yeah, and less competition will do that. I mean, quite frankly, Andrew, a lot of these, again, you look at some of the regional or even super regional banks that are either under some sort of merger or that are trying to compete with that big three. You got to throw Citigroup in there as well. I think there's a lot of upside in these banks. What they don't need is, of course, a bunch of legislation to be thrown at them into the election. I think that's something that is not in the cards, that legislation. In other words, something that would limit what they can do. I think that ship has sailed, and that into the election, it should be pretty smooth sailing for any of these investment banks, and obviously just some of the super regionals as well.
Is investment banking back? Obviously Goldman Sachs's investment banking is skyrocketing. For a while there wasn't a ton of activity going on with investment banking. Is investment banking back?
I'd say yes, it is, and it's likely to continue. A lot of these banks, of course, derive pretty significant fees from putting company A together with company B. And I think a lot of those companies out there have cut staff, everybody from Microsoft to Meta and so forth have cut staff because they were overstaffed. And so now, how do you squeeze more money out of the business that you've got? Well, you leaned it up. That's great. Now, one of the ways you can do it is you bolt on another somebody that is going to be accretive to your earnings. And I think that's exactly what's happening right now. We've seen it in the oil patch, and those aren't small mergers, of course, when we're talking about that. We saw it with IBM when they decided to spend $6.5 billion on a cloud player that a lot of people probably hadn't heard of, HashiCorp. But that was almost an afterthought in their earnings announcement. But these guys have customers like Walgreens Boots Alliance, Lufthansa, Airbnb. They do a lot with security in the cloud, as well as helping people squeeze more out of the cloud. And now they're going to be doing that under IBM. And I imagine that bolt-on will be something that's going to pay dividends for years to come.
So one of your positives for this coming week is Goldman Sachs. Let's look at the negatives a little bit. And I got a feeling you might go to the airlines for this. There's a bunch of airlines, discount airlines, that are hurting a little bit. And I think that one of your losers this week is in that boat.
Yeah, and I'm surprised that you and I actually even consider them a discount airline, because I don't know if you've priced Southwest lately, but it is anything but a discount airline. Yeah, you do get to include 2 pieces of luggage, but my gosh, these guys, those tickets are more expensive than I pay when I have to fly commercial on United or American. They're just, I think they do very well, but that's the pause. But the problem is they're not going to be getting as many planes as they'd hoped. So their growth will not be 6%. They've cut that to 4% already. Maybe it even goes lower than that. And Southwest is basically losing money, which is something no airline wants to see. And Southwest lost a lot of that money to the point where now they're going to cut 4 airports out. I think 3 of them in the United States, 1 down in Mexico, Cozumel. And then they're still considering cutbacks at O'Hare in Chicago and Atlanta. So those are things that most airlines would not be cutting back service at any airport right now, but these guys are, because they can't stomach the losses. And apparently it's expensive to operate in Chicago, so they're cutting back. They're not eliminating that, but they're eliminating Houston and, like I said, Cozumel, an airport in Washington, I think Bellingham or something like that. And again, Southwest had a real problem with this aircraft slowdown production at Boeing. And Boeing's going to end up hurting a lot of these airlines with that slowdown. And Southwest has been extremely loyal. It's the only plane they fly. There is no regional jet with Southwest. There is no Airbus with Southwest. And so that helps them stay lean and mean with their crews, because obviously you have to repair and keep those aircraft flying. But my gosh, right now, I think Southwest is in a little bit of a hurt. So they're sort of in my penalty box right now, Andrew.
Yeah, their high was about $39 this year. They're down in the mid 20s, so that's not. I did read about those 4 airports that they're going to cut out. If they cut out Chicago, my son will not be very happy, because that's where he lives, and Southwest is one of the airlines that he flies. So that's going to be a big.
They're just cutting back. They're not eliminating Chicago.
Right. So I'll let him know, and hopefully he'll be happy about that. Yep. Is there a way for them, John, to become cash positive? I know that a lot of their efforts now are raising cash, and the way to raise cash is to make cuts. Is there an avenue for them to get healthier?
Well, cutting those 4 airports that we described, that will help somewhat, because they must not have been operating at peak efficiency, and thus they're not making as much. I doubt that they were losing a lot of money on those airports, but there's a real push right now for them to maybe address some of the fees that they don't charge or have not charged, but every other airline does charge. So that 2 free bag thing that I described earlier, they could end up having to make some adjustments to things like that. They've already gone out and you can buy that first group boarding on Southwest. So you don't have to just, it's not just dependent on, you rushing to get your seat. You can be in that first line. But they're going to have to find some other levers to pull. Maybe some of them are the rollaboards and things like that, and still give you the free checked bag, but maybe they can start charging for rollaboards and things. That's what everybody else does, really. Unless you're a high-level flyer with American or United, if you're boarding in group 8 or 9, they're going to charge you to check that bag at the gate. So I imagine Southwest is exploring avenues like that.
So let's go to one of your bread and butter things. And you and Pete have a new book out. It's called It's Not an Option. Options is really how you make your money. And there it is. It's not an option. And, you can pick that up. You can go to Market Rebellion and find that book. I believe you can find it on Amazon as well. So
it's not an option.com. They can claim their free book right from that website.
Exactly. So there is plenty of ways to find that. And options trading is really where you excel, and that's the part of the market that you love. And we talked about uranium and CCJ. Explain to us why you're excited about this. I know it has to do with the smart money getting into this stock, and explain to us the unusual options activity that you look for with respect to this stock.
Sure. So I'll go right to the basics, because many of the folks watching this segment may have never traded an option, may have never really heard of calls and puts, or perhaps they've heard of them but don't really know too much about them. A call option gives you the right to call or take stock at a certain strike price for a certain period of time. So when we see large numbers of calls being bought, that's a bullish trade that somebody is making. They're giving us a target because that's the strike price that they're buying. Stock might be trading at 25, but if they're buying the 30 strike call, that's a bet that the stock is going to be moving up, perhaps in the short term very quickly, or perhaps grinding higher over weeks and months, depending how far out the expiration of that option is. So in this case, there's very short-term trading in options that will expire Friday, May 3rd, and they were buying the 52 call options. That gives them the right to take stock at 52 bucks. And as we said, they have earnings on April 30th before the market opens. Demand has been high for uranium products. And in fact, this stock was up almost 15% in the last month. That's a move that anybody in the material and metals space would love to see. And only the precious metals and the uranium stocks were participating in that kind of a move. The rest of them were just kind of languishing. They were down on average about 1%. But this stock up very strong in the last month. I imagine they're going to tell us what the billings look like, Andrew. So that would be, how much demand there is, and supply and demand really does matter. So when we see them buying these calls that expire next Friday, May 3rd, that's a bet that the stock is going higher. They're also buying options out in September at the 65 strike, 60 strike, actually. January, they're buying at the 65 strike. So the great thing about options is that they really do tell you time frame and target to get there. And it's not that they're always right, but when they're buying in big quantities, and they were buying 1 million shares at a time through the options 2 days in a row in this one. So if I'm a betting man, I'd say that that's a pretty good bet that we see positive news, guidance, as well as earnings out of CCJ on Tuesday next week.
So help me understand, right now, the options that expire May 3rd are at 52. Right now, CCJ's selling at about 49. So if I buy, enough options, it goes up $3, I can sell that option or hold on to it and let it go higher?
Yep, you could do either. So that option gives you the right to take stock at 52, no matter where it goes to the upside. It could be at 53, 55, 57, wherever. If they had just a runaway fantastic report, maybe it goes that high. And the person that owns the right to take that stock at 52 would be rewarded for making that investment in that option. And the option seller, who's the seller of that option? Well, maybe somebody that owns a lot of CCJ stock, and they just view it as, you know what, if it goes up $3, I wouldn't mind selling and getting back in at a later date. Or I'm just counting on using this money that I get from the premium in this option to basically be a rent collector for this apartment, Camco CCJ. It's a $49 stock, so 1,000 shares, $49,000. It's awfully nice to be able to make a couple $1,000 for selling that upside call. If I owned that stock, that's known as a covered right. And I think a lot of people probably do exactly that kind of trade. But if these guys do report a fantastic result, that person would likely have to buy that option back if they want to hold on to their stock.
So this is part of your 3 at 3. And explain to us what that 3 at 3. I know it's on Market Rebellion. You put it up on Twitter. What's your 3 at 3?
So 3 at 3, Andrew, is a brief program. It usually runs between 5 and 10 minutes at 3 o'clock Eastern time. And it's basically the 3 best opportunities we've seen that day. And we post it up for our subscribers, who in many cases are already in some of those stocks, but they don't know ahead of time which ones I'm going to cover, because I go through all of the list of perhaps 25, 30 different stocks that we've seen. And I say, okay, let's do this one. Let's do CCJ. Let's do, for instance, Meta, and let's do American Airlines, and see how these 3 stocks perform, because that's where we're seeing that unusual activity. In other words, that's the smart money I want to follow.
So you're following the big dollars going into the options for those particular stocks. And explain to me your vertical approach.
Well, what I like to do is a vertical spread is where, for instance, if the stock's 49, I'm probably buying the 50 strike call. That gives me the right to buy at 50. And I'm selling the 52s or 53s. What was the catalyst for getting into that trade? The unusual activity, following the smart money. But I also like moving the odds further into my favor by collecting a premium for the option above the market and owning an option at the market being where the stock is trading at that moment. And if I do that, I think I've moved the odds into my favor. I've committed less capital to the markets, and I'm in a good position that if the stock does react positively to earnings, I could double or triple my money on that bet. And that's what I'm always trying to do. And when it doesn't work out, Andrew, I cut my loss, move on to the next trade.
And you can find all of that information on marketrebellion.com. That's where John and his brother Peter put all their information, and you can find it right there. But let's recap real quick. Your winner, Goldman Sachs for this week in terms of stock. Your loser, Southwest, LUV. And as far as options, you're going with CCJ. Those are your three picks for this week. Good luck to everybody out there. And John, thanks so much for joining us. And this is it's been great. You know, we always, like I said at the top, we always look back. We never give anybody that little nudge forward and say, here, go make some money. So we appreciate it.
Love doing it. Thank you, Andrew.
So, John, where can people find you? I know it's marketrebellion.com. I know you have the Rebel's Edge, but where can people find you on social media?
Well, on Twitter, Andrew, I'm at JONNAJARIAN. And on Instagram, I'm the Dr. J, THEDOCTOR, the letter J. And I'd love to interact with as many of our viewers as would like to come on over and listen. So please check those out. Follow us. Follow Andrew Brill as well, folks.
Thanks again, John. Appreciate it.
Sure.
Thank you for watching Next Week on the Trading Floor. We hope you enjoyed the insights and forward-looking information from John and Market Rebellion. If you need help being financially resilient, please head over to Wealthion.com, sign up for a free, no-obligation consultation with one of our registered investment advisors. And remember to follow us on social media for the latest news and information to help you invest wisely. And if you could like and subscribe to the channel, we'd greatly appreciate it. And don't forget to hit the notification bell to find out when we post new videos to the channel. Thanks again for watching, and until next time, stay informed, be empowered, and may your investments flourish.